We are live again. Thank you all for tuning in. Brandon, it is an honor to have you on this live stream. So, for today's live stream, we're going to be covering an advanced session where Brandon is going to be showing us himself how he manages his portfolio, how he doesn't really sell his assets, and he uses them for leverage. He borrows low and earn high. Is that right, Brandon?
Yeah, absolutely. So the secret, if you want to call it that, of the wealthy individuals is that they accumulate assets that produce income over time, and they never sell any of their assets. They just accumulate more assets over time, as long as those assets are income producing. And so, what I've been doing for a few years now is turning my crypto assets into productive assets where I can actually generate a cash flow off of those.
Man, and that is amazing because that's a really good strategy when the market goes sideways, right? And maybe you bought higher and you don't want to sell it at a loss. So you can just go ahead, take a loan. Or maybe when you bought Bitcoin at a very low price, let's say $20,000, if you were one of those believers. And now that it's at almost at 100,000, maybe you don't want to sell it, but you wanted to put it to work. That's still applicable for your strategy, right?
Yeah, absolutely. So the way to make life-changing gains in crypto is to buy the assets and hold on for a long period of time. So I'm a big believer in the Bitcoin narrative, of course. Pristine collateral, number go up. The governments of the world, the central banks of the world, aren't stopping debasing the fiat currencies around the world. So the Bitcoin narrative is something that most people understand and know about. But the other narrative that I think is much more powerful is what I call DeFi and Web3. So this is the idea that traditional financial systems will gradually migrate to blockchain rails. So we're migrating from centralized systems to decentralized systems. We're migrating from traditional finance to decentralized finance. And by the way, finance is the largest industry on earth. It's bigger than energy. There's nothing bigger than the financial industry, and there's no reason why all financial activities should not be happening on blockchain rails. That's what blockchain was designed for, at least when you're talking about smart contract enabled ecosystems like Ethereum. So, that other narrative, DeFi and Web3, I think that's going to be playing out alongside the Bitcoin narrative. And as a matter of fact, I'm actually much heavier allocated towards things like Ethereum, Solana, and Sui because I think over the course of this year and the next couple of few years, um, I think that that migration of the world's capital from centralized systems into decentralized blockchain rails, I think that's going to be more compelling and larger upside potential than Bitcoin. I think Bitcoin will benefit, but I think these smart contract ecosystems at the moment are very undervalued. And with tokenization, real world assets, stable coins, and all of the applications and use cases for stable coins, micropayments, etc. I think we're going to have a lot more demand for block space, and I think these smart contract ecosystems are going to grow tremendously. So,
Man, I've been researching now that you bring it up. I've been researching hard on tokenization. As a fact, I actually just released a quick short on the finance and how they are tokenizing trillions of dollars of stocks. So you can now use this for DeFi. So let's say that you have a portfolio with Nvidia, Google, Apple stocks, how you're gonna be able to take loans against it. And then I came across the Canton network. Are you familiar with it, Brandon, by any chance?
I have heard a little bit about it. I'm actually getting ready to do a deep dive on that fairly soon here for our community at Overseas DeFi. We have a community call every Thursday within our community, and in addition to, a recent market update and kind of what's going on with macroeconomics and all the rest, we usually do some sort of a deep dive into a new protocol or something like that. So that is
Man.
on deck for diving into Canton. Last week, or just on this recent Thursday, we took a look at a decentralized options trading exchange called Avo. So yeah, we always like to look at something new and interesting every Thursday.
Man, that is so amazing. And, I'm going to do a quick introduction now. But before we go there, I want to give a shout out to Jason and John for tuning in. I see your messages on the public chat. Thank you so much for joining. This is really cool. If you guys have any questions because you joined, you can ask them. We're gonna have Brandon, or if the question is for me, I can answer them live. So thank you for tuning in. Appreciate you guys. So, quick introductions. For those of you that don't know, Brandon, he is the co-founder of Overseas DeFi. Overseas DeFi is a private community that helps you step it up and level up in DeFi. They do multiple weekly calls. They show you how you can take your assets that you own, for example, Bitcoin, Ethereum, or whatever you bought in the past, and how you can create cash flow out of it without selling. Brandon does what he's gonna preach for a living. He's always teaching about it, talking about it, so you're gonna be able to hear from the man himself. And then on my end, I am Davis, founder of DeFi Orbit. We are a portfolio manager specifically for liquidity providers. As of today, we're still on beta, which means that you can only get access through an invite code. But if you're watching this, I'm gonna have at the end of the call a link that you can use where you're gonna be able to bypass the invite code for watching this. So we're really excited to have you in here. Brandon, I'll let you go over it. The intention for this session is to go over how you can borrow low and earn high. And Brandon is gonna show you in person how to do it. And Christian, good to see you. Brandon, why don't you take it from here?
Sure, absolutely. Yeah, so the whole concept of borrowing low and earning high, that's really kind of the flagship product of what we teach at Overseas DeFi and what I've been doing for a number of years now. And but at a deeper level, at a sort of foundational level, I consider myself to be an investor first and foremost, and my favorite investment assets are crypto assets. So Bitcoin, ETH, like I said earlier, a little bit of a Solana position. I not the hugest fan of the Solana ecosystem. I've had some issues with getting transactions to go through. I'm the kind of person that's doing DeFi all day, every day. So really, the user experience really matters to me. But nonetheless, I do have a position in Solana. The best technology, in my opinion, right now is coming from the SWI blockchain. So I have a bit of a speculative position on SWI as well. But the main point is to organize my treasury. I call it a treasury, just like Michael Saylor has the strategy, formerly known as MicroStrategy. They've established a corporate treasury based on Bitcoin. So myself as an individual investor, my treasury is composed of Bitcoin, yes, but also I have larger allocations for Ethereum, BNB chain, Solana, SWI, AVAX. There's a number of other coins that I'm forgetting. But once I have that treasury set up, that's my nest egg. That's my assets. That's my collection of coins that I want to hold on to for the long term, right? That's how we can make generational wealth and massive returns in crypto is, everybody can understand that Bitcoin and ETH and everything else is going to go up over time just because of the debasement of fiat currency. But when you also consider the network adoption and the network effect, Metcalfe's law, especially for these smart contract ecosystems, it's just a no-brainer in my mind that over the course of the next 1 to 5 years, these assets are going to go up. You could say my base thesis is number go up technology, right? So anyway, once I have that treasury set up, then the idea is, hey, I just want to hold on to these assets for a long, long time. And at the end of the day, cash in on some lifestyle chips, etc.
So what you're saying, Brandon, and for you, for FYI guys, this is not scripted. We did not practice. I mean, I trust Brandon. I trust his knowledge. I know he's gonna be showing you guys how to do really cool stuff. But like, this is not scripted. So going back to you, Brandon. So what you're saying is you need to find the assets that you have a high conviction on, like Bitcoin, Ethereum. I know you just mentioned you don't do Solana. In my case, I'll do Solana,
Well, I have a
and
little
then
bit of
prepare.
Solana, but yeah, it's not my favorite ecosystem.
Okay, so once you find the assets that you have the highest conviction on, then you buy more of those and then you use them as a leverage, right?
Sure, sure. So
Okay.
so once I have my treasury set up, and I'm constantly adjusting my allocations based on the market environment and what I think what I think the future holds, the relatively near future holds. Anyway, once I've had that treasury set up, now I'm going to collateralize some or maybe a lot of those coins on the different decentralized lending protocols. So I'm a human. I have bills right here in the real world, so I need not only I'm going to hold on to these assets for the long run, but I also need daily cash flow, right? So I collateralize my assets on trusted lending protocols, and that's the first step. When I borrow coins against that, this is where the borrow low, earn high comes in. So, for example, I could start sharing my screen here if that's all right, Davis.
Let's go for it.
So, my thesis tells me that Bitcoin and ETH, etc., will appreciate at an annual rate of maybe double digit, maybe triple digit annual rates, depending on the asset.
Sorry,
And
Brandon.
so,
It's
sorry,
not sharing. Just in case it's not sharing, we
I'm
cannot see
still
it.
working on it.
Oh, okay.
It's
My
hard
bad.
to talk and click at the same time. That's actually my ETH chart at the moment. So borrow low, earn high means that, see, here's my assets. This is one of my lending and borrowing positions on Aave. Aave, by the way, has been around the longest. It's the most battle tested lending protocol on earth. There's always smart contract risk associated with sending your coins to this protocol. But Aave has a fantastic track record, so I feel very confident, and I'm not too worried about the risk associated with sending my coins to the Aave smart contract. Anyway, once I have these coins collateralized over here on my supply side, now I have collateral against which I can borrow. You can see here I'm currently borrowing USDC. The interest rate here that I'm paying on that loan is relatively low. It is a variable interest rate, but as long as my crypto assets appreciate at more than 4 or 5% a year, which I understand sometimes Bitcoin will have a bad year. Last year we had a quote unquote bad year and Bitcoin was down 6%. Okay, so that was obviously not playing out for this thesis, but generally over the long haul, my crypto assets are going to appreciate more than the interest that's accruing to my loan. And by the way, with these lending protocols, this is probably the most powerful part of DeFi is that I can borrow this capital without waiting in line, without setting up an appointment. I don't fill out an application. I don't get my credit checked. None of that. I just post my collateral and go ahead and borrow what I want to borrow, as long as I do so responsibly. Excuse me 1 second. My phone is beeping. That's enough of that. So if my collateral appreciates at more than 4 or 5% a year, then I don't really need to pay this loan off. And if ETH and Bitcoin have a fantastic year and they're up 40%, 60%, 100%, then not only am I not paying that loan back, I'm actually going to borrow more. As long as I keep my loan to value ratio healthy, it's all good. And so once I have this borrowed capital, I can then take that to a liquidity position. And you and I both know the yield that I can earn on a liquidity position is a lot higher than this interest rate that I'm paying on the loan.
Sorry that I interrupt you, Brandon. This is great and this is really good information. So recapping, 4%, you pay 4%, and then you can, even on a full range on Solana at USDC, you can make the 5%. So you're gonna be
Oh
good.
yeah.
So just to give you guys some pro tips, number one, if you use DeFi Orbit, we have a way to automatically sync your loans, and we show you exactly how much you're paying in real time in dollars value for that loan, so you can use it as a target. And if you are not familiar with Aave, we also have a crash course in our YouTube channel where we go deep in how to do all of this. So you so you guys can keep up. Brandon,
Yeah,
please keep.
yeah. So predominantly, I'm taking the borrowed capital for which I'm paying a single digit interest rate. And by the way, that interest just slowly accrues to the amount of the loan. So the loan balances will go up over time. But again, the thesis is these crypto assets on the collateral side will go up at a higher annual rate over time as well. Um, I also, so in addition to providing liquidity with the borrowed, excuse me, with the borrowed capital, I also treat this as sort of like a HELOC. So if you own your home and you have a home equity line of credit, it's just a credit line against which you can borrow some cash when you need it. This is the same setup. It's in crypto, it's not based on a home. By the way, I would not get involved in the real estate market anymore now that I know and understand what's available to us in DeFi. But that's another story. So sometimes I will manage my loan to value ratio such that I have a little extra borrowing power. I'm not borrowing the limit, not anywhere close to the limit of what I could borrow from Aave. And then if we have a nice dip that I want to buy some more cheap assets, I treat my lend borrow position on Aave as a cash facility. So in other words, if I want to scoop up some cheap ETH or some cheap Bitcoin, I can just borrow a little extra against my position here, go to Pancake Swap or whatever, buy some more coins, and I can actually loop that as well. So that's a common strategy is where you borrow some USDC, for example, you go and swap it for some extra ETH, and then you add that ETH, you boost up your collateral position over here. That brings your LTV back down, and you can actually repeat that process again as long as you're aware of the risk. So there is, in addition to the smart contract risk, there's a liquidation risk on something like Aave, where if your collateral value drops too low against that loan that you have there, then the protocol can and will automatically sell some of your collateral assets to go ahead and pay off the loan for you. So we want to avoid that at all costs. Not only is it a forced sell at probably the worst price you could possibly imagine, but there's also a liquidation penalty, a big fat fee that's going to be charged. So we have to manage. You can see here my health factor. Um, Mainly what I keep an eye on is my loan to value ratio (LTV). So this might look a little bit high to somebody that's into this and taking advantage of collateralizing some of their assets and borrowing against it. And typically we prescribe something a lot more conservative than you can see my LTV 62.5% here. More likely we're targeting something like 35, 40, maybe 45% at the outset. But what I've done here, which is a little bit more complicated, is not only am I borrowing USDC, I'm also borrowing some amount of Coinbase wrapped Bitcoin and a good bit of ETH. So the reason I've sort of changed my strategy, and here this is in recent months, maybe the last couple of months, is because we've been in a downtrend. Those of us in crypto and paying attention to the price of Bitcoin and ETH and everything else, Since October 6th, we've been crashing pretty hard. And so some of my debt now is also denominated in terms of ETH and Bitcoin. So if the prices go down, well, of course, my collateral is going down in value, but a good portion of my loan is also going down in value. So with, without considering that USDC portion, it's almost it's you know 1 to 1, 6 one, half dozen the other. If prices come down, both my collateral and my loan are coming down at the same, roughly the same rate, right? And so my LTV isn't impacted. So the fact that I have these borrowed volatile assets over here, that gives me more flexibility in terms of running a much higher LTV.
Okay, and as a strategy here, Brandon, as well, when the price of Bitcoin and Ethereum goes down, if you're also taking a loan against it, so does the value of the loan, right? Like now you have to pay less for those assets.
Uh, I'm sorry. One of the comments says that Brandon has a big echo on his voice. So, are you hearing an echo on your side? Let me see if I can.
I think that was earlier, Brandon. But yeah,
Okay. Oh, okay. Thanks, John. It says the echo has gone now.
yeah, I think it
Okay,
was me.
perfect. Oh, I think it has something to do with when you were not muted, Davis. I think that's when the echo came in. So, okay. So
Yes, sir.
apologies for any echoing. So, sorry. Could you repeat the question?
Yeah, I'm saying that if you get Bitcoin, right? Let's say you supply Bitcoin at $60,000, but you also get a loan against it in Bitcoin. In that case, if you were to get a loan in USDC or any stables, then the loan stays the same because you got it as a loan, as a stable, right? So like the amount that you owe is always the same amount that you took. But if you take the loan, let's say in Bitcoin, but the value of Bitcoin drops as well, now you don't really owe the same amount. So it's more volatile, but also the amount of the debt goes down with it, right?
Yeah. So think of it in simple terms. So your LTV, what is that? It's just a fraction. It's your loan divided by your collateral, the value of your collateral. Okay. So if I have 1 ETH as my collateral, and then my loan is zero point 0.5 ETH, that's my ratio. My LTV would be 1/2 divided by 1. It would be 50%. Whether the price of ETH goes up to 10,000 or down to 1,000, I still owe half an ETH and collateralize 1 ETH. My LTV doesn't change. So if I didn't have any USDC debt over here, then my LTV would be pretty much fixed. There's a different ratio in terms of I have more ETH and less Bitcoin on my collateral side. That is similarly reflected over here on my borrow side. Um, but so if Bitcoin and ETH don't go up and down by the exact same percentage, then yeah, my LTV will fluctuate slightly. But the reason I have these are called negative deltas. So essentially, delta means that uh, what does the value how does the value of your investment change as the price changes? So very simply, if I own 1 ETH, that's 1 ETH long delta. If ETH goes up in price by $100, the value of my investment also goes up by $100. So price goes up, the positive delta value goes up. Similarly, if I'm short 1 ETH and the price goes up, now I'm actually getting hurt by that, right? If I owe 1 ETH at $3,000 and the price goes up to $3,100, now I owe $3,100. So by borrowing over here, I'm setting up what's called negative delta. It's a little section, a little piece of my overall portfolio that actually benefits if the price goes down. So another word for that is hedge. These loans over here, effectively, this is hedging my portfolio, which is reducing my downside if price continues down. We've been in a downtrend. We're in a pattern of Bitcoin and ETH where it's steadily making lower highs and lower lows on the chart. And we could take a look at technical analysis and things like that. But in an environment, in a market environment like we have right now, where these assets are trending lower, I want to have my downside protected. I want to have my portfolio well hedged. Now, I track everything in spreadsheets, as you know, Davis. It's a massive pain in the
I
neck.
know. I know,
It's a
Brandon.
massive
I
pain in the
know.
butt to sort of manually enter all of my data. I've in recent times I've become more sophisticated with what I'm doing in Google Sheets and importing the live prices and things like that. And some nice formulas where I can kind of see my liquidity positions, my perpetual futures position, etc., kind of dynamically. But yeah, the point is, well, 2 points. One, yeah, it's a pain in the butt to enter all of my data manually into a spreadsheet, which is really nice in terms of what DeFi Orbit offers. But the other part is I'm very big on kind of monitoring my overall delta position. So if somebody's setting up a portfolio, and this is another beautiful thing about a lending protocol where I can set up these negative deltas, is I can balance my portfolio where I have a bunch of longs, right? I have coins in my wallet or coins on a lending protocol. Either way, that those coins belong to me. So those are a bunch of longs. So then I can also have some short positions and I can kind of balance that out. So right now I could tell you that I'm closer to delta neutral than I was a month ago, but I am still overall, if you look at my portfolio holistically, I'm still delta positive. I have more long positions than short positions. If the price drops, I get hurt, but it hurts a lot less with all those shorts hedging my portfolio. If the price goes up, it cuts both ways. If the price massively goes up, I'm still making money. My overall portfolio is delta positive. It's going to grow in value, but it won't grow as strongly as if I didn't have those short deltas. So hedging can be good. You do have to have a pretty decent read on the price action and what's happening and how the market is doing in recent times.
So, excuse me, Brandon. So, what you're saying is right now you are very spread out between longs, short. You have like a very hands-on portfolio, right? And this part of the reason why you're still on spreadsheets because you're actually actively monitoring like how everything performs when it goes up, down, right? So you can sell if it goes against your shorts and all this stuff. So right now, would you recommend this strategy to someone that wants to be more passive per se? We already know that passive income in DeFi is it possible? Yes, but if you want the real gains, then it's not gonna be as passive. So, what would you recommend to the people that want to manage their portfolio, but maybe no more than 2 hours per week? Like, how would you set up your portfolio using the same strategy of borrow low and earn high?
Yeah, yeah. So there's always trade-offs. So our main cash flow engine in DeFi, right, is liquidity positions. Now there's literally hundreds of thousands of different pairs out there for which you can provide liquidity. And by the way, if people don't know, when you provide liquidity, you're doing so on a decentralized exchange. And a decentralized exchange has something called a liquidity pool. And it's just a bucket of two tokens. So it allows people to swap one token for the other token. So an LP is always two distinct tokens, never one, never three, always two. And you have traders who are coming to the decentralized exchange. They're swapping one token for the other. And then you have people like me, excuse me, who are providing the liquidity for that pool. So I'm literally putting my tokens into that liquidity pool, and I'm the one that's on the other side of every single swap, right? So if somebody swaps USDC for ETH, I'm the one that's giving them the ETH and accepting the USDC, and vice versa. Um, so when I provide liquidity, I want that cash flow to be consistent. And so, of the thousands and thousands of different liquidity pools out there, I'm sticking to the basics. I'm a huge fan of the Ethereum ecosystem. And it's not just Ethereum mainnet, that's the OG, of course. But nowadays we have blockchains like Base, Arbitrum. This particular position you see is on the Base blockchain, which was created by Coinbase. And people want to participate in the Ethereum ecosystem in one form or another. And as soon as somebody wants to participate and do things on these blockchains, they have to have gas money, right? People have to buy ETH in order to pay their gas fees for whatever transactions they're doing. And so I like to provide liquidity mostly for ETH USDC. That is a pair that gets traded all day, every day. The volume ebbs and flows, but it's a very consistent, very high income earner. Um, I also provide liquidity on Sol USDC. It's a much smaller position. But that's really how I generate my consistent cash flow.
I love that Sol USDC one. That has been to me one of the biggest printers, especially on Orca. Sui was also doing really, really, really well. Unfortunately for me, I bought Sui at $5 because I kept going out of range when the market was going crazy. And you know how it is, Brandon. We haven't recovered yet, but that's actually a really good asset to use under this strategy, right? Don't sell what I bought high, borrow against it, and then put it to work. So, question for you, Brandon. Let's say I know we are at 10:40. I mean 12:40 already, so we got about 10 more minutes. Maybe if you guys want to hang out a little bit longer, we can push a little bit longer. But like to respect our audience time, we got about 10 minutes. We can spend 5 in Q&A. So let's say that you came into Aave, you supply some assets that you bought low. Now you found the best, AP wise. What do you do next? And by the way, guys, please feel free to drop a question. We're gonna go over that later. Tave, good to see you. Money Market XRP, good to see you. So now that you have borrowed some money, Brandon, what do we do next?
Yeah, so like I said, I do prefer the sort of the mainstream blue chip assets in terms of providing liquidity. So ETH USDC is pretty much my main money earner. Like I said, I do have a small liquidity position over here on Solana. You can see my range. I always designate my range. So backing up a step, we provide concentrated liquidity. So in the olden days, circa 2022, Uniswap had V2, and that was full range. So you provided your liquidity to the liquidity pool, and your capital was used everywhere on the entire spectrum of price. So if the price went down to zero or to infinity, your capital is way spread out over the entire spectrum of possible price. Nowadays, we have V3 and even V4, where we can designate a specific price range. We can concentrate our capital into that small range of price, and that allows us to be much more capital efficient, having our bag of capital just in that narrow range, and the yields, of course, are much, much higher. And to your point earlier, what does somebody want to do in terms of just a couple of hours a week? First of all, I would say, even as hardcore as I do this game, if you look at this position, I've had this position open since January 4th. So it's been 6 days. I did not make any changes when the price escaped my range here. And that's mainly because of my technical analysis of the chart. We had the trend line here. I had drawn this sort of resistance zone on my chart just based on a lot of the lows and highs that have occurred over the course of the last month and a half. So I just didn't bother doing anything. And my point is, very, very little time is spent on managing this particular position, even though I would say this range here is maybe a little bit more aggressive than the average user would want to be. Now, you can set up a much wider range, and let's talk about the width of the range for a second. So if I have a really wide range, my yield will be lower. Okay, whatever capital I put into the position, it's spread out. It's spread more thinly. So that's a drawback of having a wide range. You only have a little, your capital is spread thin. Let's put it that way. So your yield is going to be lower. Oh, okay. But at the same time, a benefit of having a wide range is the price isn't going to escape very often. It's going to stay inside that wide zone most of the time. I had this little escape right here. If the top of my range was higher, I wouldn't have even had that. And of course, when the price escapes your range, a couple of things happen, right? So if price escapes your range, number one, you stop earning fees. Now, that doesn't necessarily have to be a bad thing. It's just something that happens. If price escapes your range, you stop earning fees. What's more important is you then need to make a decision. I literally made a trading decision here. When I saw the price go above my range, I decided to do nothing. And that's because, myself, I have a years and years of experience day trading. Wouldn't recommend it. It's a tremendous drain on your time and energy, but nonetheless, I cultivated an ability to sort of read the price action. Price action is like a foreign language, and again, I'm not proud of this, but I spent my 10,000 hours, watching these screens 5 days a week, 6 hours a day. So I cultivated an ability to read the price action. Doesn't mean I can predict what's going to happen next, but I can put the odds in my favor, right? So anyway, if the price escapes your range, it's a decision point for you. And if I had decided to, let's say I decided to move my range higher, okay, I would have literally had to rebalance my capital. And when you rebalance, you're swapping some of your coins, some of your tokens for the other token. Okay, so for like if I zoom in right here, right at this point here where the price escaped my range, my position was converted into 100% USDC. That's how it works. If traders are buying the asset, price is going up, what's our liquidity position doing? We're filling those orders. So traders are buying, we are selling. By the time the price reached the top of our range, we don't have any more ETH to sell. It's sold out. All we have is USDC in the position. So if I wanted to, let me make this a little bit clearer because there's just too many overlapping drawings on my chart. So if I wanted to rebalance my position to this new position here, all of a sudden you have this big portion of my new range that needs to have ETH. Think of it as you operate a little store, and you have two shelves. One shelf you have ETH, the other shelf you have USDC. My ETH shelf is bare at that point. If I want to restock my ETH shelf, what do I have to do? I have to buy. I have to swap some of my USDC for ETH to restock that shelf, right? So this new position, if that was the decision I had made, it would require me to rebalance my capital, i.e., trade some of my USDC for ETH. That is a buy. And so if I had done that, I mean, you never know what price is going to do. You can put the odds in your favor, but you never really know with Definity what the price is going to do. But if I had made that decision, I basically would have bought the high, and now I'd be taking heat on that trade. So to your point, you can set up a wider range. The price won't escape as frequently. You'll have fewer trading decisions to make, which is important. We aren't all traders, but your yield will be lower. Now, I would say, I mean, I have a client that was running a $1,000 wide range, and his APR was still on the order of 5 to 6% a month. I'll say that again.
That's huge.
5 or 6% per month.
5% on a wide range. That is
Yeah.
wild.
Yeah, and I might be misremembering. I feel like
just...
I think I'm being conservative on that. Myself, I mean, I can show you this most recent position. I just collected fees yesterday. So my batting average on this position is 125% APR.
And can you zoom in, please, and share with the audience which position is this so they can go and get inspired?
Let's see if I can zoom in. I think that would be control. Oops. Here, let me just do it this way. Is that better?
I think it is.
So this is the initial capital that I deposited into that liquidity position. Now I'm also using a little bit of leverage on a protocol called Revert, which I don't know if we want to get into, but over the course of the next few days, I went and collected my fees. And then this formula here is just basically adding up all of the fees that I collected, dividing by the capital that I deployed into that position, and then dividing again by basically by the number of days that it's been since the beginning. Anyway, the point is, that's a really great yield. And again, to your point, like this has been way less than 2 hours a week. It takes me 5 minutes to go in, connect my wallet, and collect the fees.
Man, I feel like we can go over Revert and just do like a whole session on it, because if you learn how to use it and how to take leverage on it and redeploy it into LPs and keep an eye on it, that could be really, really powerful. And I know, Brandon, you're an expert. Actually, this live stream was supposed to be originally about Revert, but we decided to go over the borrow low, earn high strategy first, and then we can review Revert. And by the way, if you guys use Revert, DeFi Orbit fully supports it, and we show you like your margin data, how much you owe on the loan, so you never get liquidated. Brandon,
Yeah, so
we have,
yeah. Well, I just wanted to mention that Revert is another one of these situations where we can borrow low and earn high. Now, the interest rate that I'm paying over on Revert is more than double, okay, what I'm paying on Aave. I just refreshed it. So at the moment, the interest rate, the borrow APY on Revert is about 11%. But if I can borrow capital at 11%, and then I'm earning somewhere on the order of 80 to 120% on that. This is called interest rate arbitrage, or said more simply, borrow low, earn high. So we're doing this all over the place. The main strategy is on Aave. And I wanted to mention another thing is, right now, the market environment is pretty bearish. We're kind of ranging for the last month and a half or so, but we've been bearish. That's not going to last forever. And so the really beautiful part of this strategy is those times when prices are ripping higher. And price doesn't go straight up. what it does is it makes a big move higher, and then it uh, consolidates, right? It gathers strength for the next move. And so this strategy gives you the best of both worlds, and that's really the sort of secret sauce that we're teaching at Overseas DeFi is how can I set up a portfolio where when the price is ripping, I'm making money, and then when the price is stagnating and just basically ranging sideways for a while, I'm also making money. And that's exactly what we do. It's a lot easier when everything is bullish, but as you can see, I can set up my portfolio and do quite well even when the market is in a downtrend. We haven't even got into my perpetuals futures position on GMX, where I'm literally shorting ETH to again give myself some more negative deltas. But I really like that a lot, and it comes back from my day trading days. I'd sit here and watch the chart. I used to trade the Nasdaq 100 futures, and that freaking price chart would just go sideways endlessly. It was super boring. And as a disciplined trader, I had to wait for the nice moves to the upside or the downside. And so what I'm saying is that I can tell you for a fact, markets spend a lot of time going sideways. That's just the way it goes with all financial markets, especially with crypto. They say that most of your gains come at like 10 days of the year. I think they say that about Bitcoin and probably ETH as well. So I really love the ability to just have that treasury when the price is ripping. Happy days, right? My portfolio is gaining in value for every single dollar with my spot assets, and then when it takes a rest, happy days. My portfolio or my treasury is doing nothing, but that's when my liquidity positions really start printing. So
Brandon, I feel like we gotta do another session also on profit
yeah.
taking. Because some people, especially me, I remember when the Trump rally was going crazy, I started taking screenshots instead of taking profits. So, when I ended up taking profit, it wasn't as juicy, but like, you get the high, you get hype, you wanna, you wanna keep it going up, and that's when things happen. But yeah, I agree 100% with you. And sideways, in my opinions, are good because when the market is sideways, you can stay in range for longer. And if you want to deploy some cash into liquidity positions, I will say that right now is a really good time. Please, Brandon, let me know if you agree or not with me, because you'll be entering the market at a low price. So it's not like buying high at $200 for Solana and then open a new range at 130. I mean, you can set it up so at 200 you get your money back, but if you bought any higher than 200, you'll be actually going through more impermanent losses. What are you what was your take on that, Brandon? And then after that, we're gonna go over questions.
Yeah, I think about the members who have just recently joined Overseas DeFi and signed up for our group coaching program. I'm super envious because everything is on sale right now, and knowing what I know and how to
Right.
set these things up, like oh my gosh, somebody who's just getting into crypto and DeFi for the first time, they get to buy ETH for sub $3,000 or whatever it is right now, just around 3,000 bucks. They get to buy Bitcoin for or around 90K. So you really could be set up for life, and that's the beautiful thing as well is that you can buy these assets, and the prescription is okay, buy and hold, right? Be a hodler. They even have the T-shirt, right? uh, but what are you going to do in the meantime? So okay, good job. You bought some ETH, you bought some Bitcoin, you bought the lows. Now what? You still need cash flow. You still have bills to pay. So I love what we can do in DeFi is we can unlock that cheap capital, very cheap capital relative to what we can earn on it. And so that way you can fund your lifestyle and pay your bills while you're waiting for this Bitcoin narrative and Web3 DeFi narrative to play out over the course of a few years.
I agree with you, Brandon, and I'm gonna say it again. If you're just getting started now, it doesn't matter if the market is not moving as fun as it used to, and it will do it again. But if you're entering now, you are getting blessed. Spend your time educating yourself, learning as many strategies as you can. Because if you can position your portfolio in the right spot for the bull run, you're gonna be printing money like crazy. So, blessed are the ones that are just getting started. Don't think that it's boring and yada yada, and focus on the fundamentals. So we got about 5 minutes left, Brandon. Before we hop back into questions, guys, I want to share something with you. Brandon, do you mind if I share?
Go for it.
Yeah, I think I'll have to take over. So, if you are a liquidity provider, we have built DeFi Orbit specifically for you. I used to use spreadsheets myself. I used to spend hours updating my portfolio. Market will swing, and I had no idea what was happening. So to solve that, we spent all 2025 building DeFi Orbit. In here, you can see in real time your daily, weekly, monthly yield, how many positions you have in range, what's your actual real APR, how much money you have invested. You can open any positions. We support Ethereum and Solana, over 10 networks and over 6 protocols, including BFAT, Revert, Orca, Aerodrome. So you can just click in here, and with one click, you can see per position what's your estimated daily, weekly, monthly pending yield. You can click expand details and see your impermanent loss, total P&L. You can also see historical performance. So just for you and your position, you can see from the moment that you started this position, what has been the value over time, the yield over time, and even the APR over time. You can see how many transactions you did, what was the token price. So, for instance, in here, we can see that this position was open when Ethereum was at $4,000. So, that is my target. But as long as you're making fees, you're good. You can see your range, you can add notes. So, for example, I can go ahead and say, Brandon recommended this position. Any IL is on him. So you don't forget. So you guys can literally do everything in here. See your allocation, how many fees you're generating. If you like lending and borrowing, let's say for this strategy that we just explained, you can come in here and now you can see in real time. Let's actually go for something more fun. Let's go here. Now you can see in real time how much you're paying for that loan monthly. So as Brandon explained, as long as you're making over $12 monthly, which is extremely doable, on that $2,000 you're breaking even. So we build this for liquidity providers. There is way more stuff that we can show you, like for example setting your target so you can see how close you are. You can also see like past positions. So if you open, let's say, a Uniswap position 11 months ago and you close it, you can actually see the real performance. So if you're interested in testing DeFi Orbit at the moment, we are pre-launching beta, which means that you're gonna need an invite code. But I'm going to drop a link right now. 1 second. So the link is gonna be earn high. Here we go. It's on the chat. If you use that link, you're not gonna be asked for an invite code, and you're gonna get 7 days everything unlimited for free. So there is the link if you want to try it out. And also, I want to take a second to talk about Overseas DeFi. Brandon spends days, literally every day of the week, explaining these strategies, putting together a group together, so they can learn how to do this on their own. He also does coaching. So if you want to learn more about Overseas DeFi, just go on overseasdefi.com and you get all the information that you need about his community. Is there anything that I'm missing, Brandon? Brandon,
Yeah,
sorry.
Davis, I put a link in the chat here inside Riverside. I don't know if you can see that. It's overseasdefi.com/5 steps, the number 5 and the word steps. So if people have never done any of this, that's a free mini course. So they can click on that. I think you have to put your email and address. I'm not the sales and marketing guy. I'm the co-founder. I'm the educational guy. I'm the head of education. So I run all the workshops, the Thursday community call, the we have different group workshops right now, and we have a private Telegram group. So there's tons and tons of content on our site, as well as pretty much real time support within our Telegram group and things like that. But if you've never done any of this before, if you click on that, it'll take you through the basic 5 steps of setting something like this up. Now, I'm not going to lie. there's a significant learning curve that comes into doing what we do, but it can be done. And especially with our guidance and our group coaching, and all the different avenues that we have for our support, you can make it happen. We have some members that are doing extremely well with this. We got guys that are earning enough in fees to buy a new car and all of that. So it's going really well. I believe that 2026 is going to be a fantastic year, not only in terms of the economy in general, the whole AI build out. It's going to trickle down through the rest of the S&P 500. I think the economy is going to be great. I think PMI is going to be turning up. And if that's true, these smart contract ecosystems like ETH, Solana, and Sui, BNB chain, all of the rest, these are going to be ripping. So I think this is going to be a fantastic place to invest and come into Overseas DeFi and learn how to generate some cash flow while you're while you're waiting for a number to go up.
And I back that up. I recommend Overseas DeFi. Yeah, they know their thing, and that's what we have Brandon in here. Brandon, real quick, let's go 5 minutes over questions. So let's go with the first one from Moneymaker XRP. Let's see. Here we go. So what about other assets like AVAX or CVXRP?
Sure, I do have some AVAX. CBXRP is what he said. So that's a Coinbase wrapped XRP product.
That's right.
Myself, XRP is kind of a binary asset. A lot of people really love it. A lot of people don't pay any attention. I fall into the latter category. I think the number could go up just as well as any other asset. I don't personally hold any XRP, but the nice thing is that if you are an XRP fan, you can actually transfer your XRP to Coinbase and then from Coinbase to the Base blockchain, and it will come out on the other end as Coinbase wrapped XRP, just like the Bitcoin, the Coinbase wrapped Bitcoin. Those are both Coinbase wrapped coin products or wrapped token products. Once you have your Coinbase wrapped XRP, you can collateralize that. Not on Aave. Aave doesn't accept that as a collateral asset, but you can collateralize it on a protocol called Moonwell on Base, which isn't as reputable as Aave. Aave is the biggest, longest, most established protocol, but I haven't heard of any issues with Moonwell as well. So,
Yeah.
but AVAX, I do have some AVAX, but the way I organize my portfolio, Davis, is mostly my treasury is allocated into ETH. That's my biggest position. But I have small positions in Solana, smaller position in Sui, a very small position in BNB, a small position in AVAX. There are a number of assets that I believe in, but mainly it's Bitcoin and ETH.
I hear you, and yeah, so ETH is your thing. Last question. Okay, let's move on to the next question. Max, let me see. Okay, so the next question, I just had it, but it went away.
There was a question
Okay, here,
about overlapping ranges, like a narrow and a wide.
this one.
You could certainly
Yeah.
do that if you. How wide a range do you use for a low effort LP? Uh, so I base my range limits on the price action. So it's not rocket science. I'm just doing some basic technical analysis. I'm figuring out where the price pivoted, whether it hit a high and then dropped or hit a low and then pumped. So those pivots, the highs and the lows, very straightforward. Just kind of marking the highs and the lows, and if there are particular price levels where a lot of the highs line up with each other, or maybe a lot of highs and some lows, like a lot of times price will have a resistance area. It'll come down and bounce up and come down and bounce up, and then it'll break down, drop below that support level, and then come back from underneath. So it's very common for a market to establish a support level that later becomes a resistance level. It's the same price level. It's just acting differently on the market, and price is reacting to that level. Same thing can happen on the upside. You might bang your head against a resistance level. It's acting like a ceiling. It won't allow price to go higher. And then one day, the bulls overwhelm it, and then you break above, and now you'll come back and test that same level from above. So resistance becomes support. Anyway, my point is, I set up my ranges based on the chart. I'm looking at the chart. I'm figuring out where's support, where's resistance, and that's where I put my range limits in. Now, general rule for me on ETH USDC, I want my range to be more or less 10% wide. That doesn't necessarily mean that I'm plus 5%, minus 5%. Depends on where I want the top of my range to be and where I want the bottom, and where the price is falling in between those range limits. But that's kind of a general rule, about 10% wide. Right now, ETH is trading for about 3,100. So I want my range to be around $310 wide. Maybe I'll go a little wider. And again, the wider you go, your yield will reduce. And it's an exponential function. So if I have a range that is $1,000 wide, and I'm earning whatever APR I'm earning off of that, if I reduce that range to 500, if I cut it in half, my yield will more than double. Okay, it's an exponential function. That's the way it works with these concentrated liquidity pools or Uniswap v3. That's the model. That's the math. So you can run a wider range and still get very good yield, far higher than what you would get in traditional finance, and fewer escapes. So fewer times when you're not earning the fees, and fewer trading decisions to make. That's very important for someone who doesn't want to, doesn't have much experience with markets and doesn't want to have to make these decisions all the time. You're just gonna get a lower yield.
Totally agree with you. So, Brandon, 3 more minutes. Let's go over a few more questions. So, from John, there is a question if you want to read it.
Sure. So, are you separately hedging with a short position when investing in concentrated liquidity pools on, say, ETH USDT pairs? How would you hedge when you are dealing with correlated pairs? So with my correlated pairs, so for example, I'm running a arrow wrapped ETH position. So regardless of where that ratio goes, that's a liquidity position that is always in the form of crypto. Right now, I'm out of range to the downside, let's say, where Arrow has underperformed ETH quite a bit. So my position has been converted into 100% Arrow. And I'm just holding that. I don't run much in the way of correlated pairs. Correlated pairs are great when the two coins are very well correlated with each other. That ratio doesn't go up and down a lot. It stays in your range, and so you're constantly earning free tokens, both tokens, right? And then if you can get the market to be in a nice uptrend, both sides of your liquidity position are appreciating in value in dollar terms. So if those two tokens are well correlated, they're both going up at about the same rate. It's not going to be perfect, but for the most part, Arrow and ETH, for example, or Bitcoin and Solana, for example, they're kind of both appreciating at the same rate. So the ratio between those two tokens is staying the same, i.e. it's staying in your range. And you can get this beautiful situation where you're earning the fees and the entire pool is appreciating in value. I do that, but for the most part, and I'm going to get back to your question, which is your question. The main part of your question was about hedging. So the answer is yes, I hedge my liquidity positions because, for example, an ETH USDT position or ETH USDC, same difference. These liquidity positions are what I call forced market participants. Once you put your liquidity into the pool, it's hands off. You're at the mercy of the market. If traders want to sell, your liquidity position is buying. right? And if traders want to buy, prices going up, your liquidity position is the one that's doing all the selling. Okay, so you're forced to do whatever the market tells you to do. Um, in the case of a downtrending price, my ETH USD my ETH USDC position is going to get converted into ETH. If the price tanks, I'm now a big bag holder of ETH. So the answer is yes. I want to have a hedge to counteract that long exposure. If price drops, I'm instead of being 50% USDC and 50% ETH, I'm now 100% ETH. I have all of that long exposure. And in this market environment, I want to have my long exposure partially, not completely, but partially balanced out by short exposure.
Okay, thank you for that, Brandon. That was very, very insightful. Uh, okay, so let's do two more questions. I mean, sorry guys, I know we're over. Brandon, is that okay if we do two more? Because the questions keep coming. Okay, perfect.
Absolutely. Yeah, I mean, to be
Moneymaker.
realistic, we should have made the live stream like 3 hours, and then we could have covered everything. But that's okay. Nobody.
Hey,
I don't
we
think
got
most people don't want to watch a 3 hour video, but that's the way I am. I told you before the stream, I can talk about this stuff for hours and hours and hours and hours. I did a
and
seven
same
hour
here.
live stream one time, so
Oh my god. We gotta
I'm
save
that
some
guy.
for later. And by the way, guys, if you're still tuning in, I appreciate you. Please drop, any topic that you would like us to cover next. We're gonna start doing live streams more often and bring in guests as well. So two more questions. Let's go, money maker again. Sorry, Matthias, we haven't. Okay, here we go. There is a question. Are you seeing it, Brendan?
Yeah, yeah. So exactly that's what I just mentioned, but we can go over it again. So again, you're forced to buy that ETH. If I have, regardless of how wide my range is, if the price drops, trade that means traders are selling ETH, right? That's how the price goes down because traders are selling. My liquidity position keeps on buying all the way down. By the time the price reaches the bottom of my range, I don't have any more USDC. My liquidity position already spent all of its USDC buying ETH from traders all the way down. So when that hits that low price, now I'm just holding a bunch of ETH. It's not in my wallet. The ETH is over on Uniswap or whatever decentralized exchange, but it belongs to me. So I'm a bag holder now. I'm holding the ETH. So my solution for that when we're in a bearish market environment, my solution is to protect or offset that potential long exposure with short exposure. I don't do this all the time. I've only been adding the shorts to my portfolio in recent times over the course of the last couple of months, right? Because that's the environment we're in. The market is trending lower. You can't, I mean, you don't have to be a trading expert to look at a daily chart and see the lower highs and the lower lows. And so I want to have that long exposure somewhat balanced out by the short exposure.
Fire. Let's go one more. Moneymaker XRP. What is the best correlated pair? I think that's personal, right? That's more like up to
Well,
him.
I mean, yeah, it's a good question, and so I provide liquidity for ETH USDC and Sol USDC because the volume is high, the yields are high, and why is that? It's because traders around the world want to trade USDC for ETH every day. Traders around the world want to swap ETH for USDC every day. People are trading those two tokens with each other every day. Now, is there also volume where somebody is swapping, let's say, wrapped Bitcoin for ETH? Yeah, it happens. People do want to swap ETH for Bitcoin or Bitcoin for ETH, but the volume is much lower. Okay. So the trade off you can provide, and by the way, that would be an excellent correlated pair, ETH with wrapped Bitcoin. If you look at a ratio chart on TradingView, right, where you're pricing, you could just type in on TradingView, you could just type in ETH BTC, ETH BTC, and that will show you the ETH price in terms of Bitcoin. What fraction of a Bitcoin gets you one ETH or vice versa, right? If you look at that chart, if you look at ETH priced in Bitcoin for the last 2 months, it's perfectly sideways. I mean, there's volatility, but for the most part, it's just been going sideways, right? So the performance of ETH relative to Bitcoin, it's been pretty well correlated. So the benefit there is the ratio doesn't escape your range. It just keeps mean reverting and it stays more or less sideways. What we want as liquidity providers is sideways price action, right? And ETH BTC has been doing great at that. The swap volume is lower. The yield is lower, but it's pretty cool because you're earning free ETH and free Bitcoin. Your fees are going to come in the form of those two coins for which you're providing liquidity. So at ETH BTC, you're getting free ETH, you're getting free Bitcoin. If you're a long-time believer like me, great. Stack up the ETH, stack up the Bitcoin, and happier days ahead.
All righty. And last question, Brandon, is from Kazim. He's asking you, I thought you're like a special use case. Will you still need to use Excel sheet for tracking your positions, or with DeFi Orbit will not need to do so?
Yeah, like I said at the very beginning, I've been making spreadsheets since the 90s, right? I'm an old guy. Fortunately, I don't look like it, but I'm almost 53 years old. So I've been using spreadsheets since the 90s. I've been using big, massive Excel spreadsheets since I first got involved in Bitcoin, which was back in 2013. And then when I first got into DeFi, which was in the summer of 2021, spreadsheets. I have a thing.
They don't know.
I don't know if you can read that. My wife got me a sticker for my water bottle. It says, "Ooh, this calls for a spreadsheet." So
So,
I'm deep in the weeds of my spreadsheet, and I've been getting a little more fancy with it. And so what's important to me is to understand my delta balance. I really want to have a good understanding in this market environment of here's all my longs, here's all my shorts. How are they balancing out right now? Plus, I have a couple of extra bells and whistles on my spreadsheet where I can I can stress test my portfolio. I can say, hey, what happens if price rips higher by 20%? What's going to happen if price tanks by 20%? I can play those kind of simulations out on my whole portfolio. That being said, holy crap. I mean, right before Davis and I got started, I was trying to update my spreadsheet, which I have to do frequently. It's all manual data entry. I'm kind of a geek with that, so I kind of don't mind it, but it's very time consuming. It's very cumbersome. It's a pain in the butt, to be honest, so uh, I don't know. Like I have certain custom things that I set up in my spreadsheet, so I'll probably continue using it. But what I've known of Davis, what I know about Davis is he's very, very responsive, not only to me and things that I've suggested, but we have several members at Overseas DeFi that are taking advantage of DeFi Orbit. And just the other day, literally just the other day, yesterday, one of our members was like, man, that Davis guy, if I put a question in DeFi Orbit, he's on it. Like within an hour, he's answering my questions. And I've seen over the course of the last several months, I've seen the product evolve. I've seen, bunches of new features coming online. So it doesn't have every bell and whistle. So I'm going to, for the time being, I'm going to continue to use my spreadsheet, and Davis knows this about me. But I would not be surprised at all if the product continues to fill out and continues to offer all of the different bells and whistles that even I could possibly want. So I'm sure he'll get there.
thank you, Brandon. And that's right. By the time we go public, it's gonna be a whole different product in the next 2 months. And just so you guys know, I seen Brandon's spreadsheet. Is no joke. It is no joke. It's like, whoa, it's very advanced. I feel like by the time we can get him out of spreadsheets, DeFi is gonna be on a whole different universe because he got everything for like long, shorts, all the stuff. Well, thank you guys for tuning in, Brandon. It was a pleasure to have you in here. Just to remind you one more time, if you guys want free access to try out DeFi Orbit, the link was dropped in the chat. I'm going to send it right now again. And if you want access to Brandon's course, which is free, is it free? The five steps.
Yep. Yeah, it's just a mini course, and it takes you from A to Z, just the basics, But if you're a DIY type of person, you can watch through those videos and set up your first crypto and DeFi portfolio. I would caution people that are brand new to this: start small. Put $100 in your wallet, and that way, if you screw up, you're not gonna, you might ruin your hour, but you're not gonna ruin your life by losing $100 by making a mistake. There's a learning curve. There are mistakes that can be made. But yeah, if you go through that course, you could get yourself set up, start small, experiment, get your reps in, as they say, right, with the different transactions. It's a new language. It's a learning process, but absolutely somebody could get started just watching those 5 videos. It's right there.
I agree with you, Brandon, and I couldn't recommend that more. Start with $100 if you're brand new. That's what I put in to get started. Because at the end of the day, the returns are the same. It's just percentage. It's the capital that changes. So the more capital you add, the more gains you could face or losses. So you start with $100, get a feel for it. And thank you everyone for tuning in. Let us know if you guys want Brandon again. I mean, we're gonna get you again, Brandon. So it's just a matter of when. And guys. Any questions, anything that you want, any feedback, please send it our way. Brandon, thank you again, and thank you everyone for tuning in. Till next time.
Bye, guys.
Bye.